Welcome back to EDS, and in this video we're going to take a little look at what we've been doing in our portfolio, what's been happening with our positions, how have we been managing them, and compared to last week. And let's just get straight into it. So for anyone that did watch the last portfolio update video that came out last week, you'll notice that we've probably got a lot less positions on than what we've had previously. There was an issue with the GDXJ position. The clearing firm decided to just increase the amount of buying power that was required overnight without any explanation or reason. That did mess us up a little bit. Things like that, impossible to predict. We just have to deal with it the best way we can, and that's what we did. So, with that in mind, we have got a Australian dollar futures position on. We are currently at about 15% in profit on that position. We've still got 60 days left to go. And as you can see, we're well within our range. We've got absolutely nothing to worry about here. I believe implied volatility has increased just a little bit over the last couple of days, as we've had these three red candles, but since we put the position on, IV rank has dropped massively, which is really nice. We've got a position on micro crude oil futures. We're about 15% of the way to max profit, very similar to the Australian dollar futures. And if we just have a little look at that position, as we can see here, again, we are very, very far away from our strikes. As we can see, implied volatility or the IV rank for MCL has been increasing a little bit. When we entered into the position, the IV rank was very nice and high. I think IV rank has pretty much just contracted straight down since we put this position on, which is very, very nice to see. We got in at the perfect time. The timing was really good on that. And with MCL, we're just going to literally let it play out. We're just going to let it work. SMH, this is a position we've been carrying for a little while. This started out as an iron condor. We then rolled the call side down because our put side was tested, and then we were whipsawed. So then we rolled our put side up. And that's basically led us into being in this iron butterfly situation. In hindsight, it would have been better to just not make any adjustments from the get-go. However, hindsight is 2020. There's no way we could have possibly known that we was going to be whipsawed around. We have got max risk on this position. Well, the spreads on either side is $5 wide. We've collected $3.26 up front. So we're playing for $1.74 at the moment. Price is currently pretty much within the range. Couldn't really ask for a better scenario based on the situation that we're in. Hopefully price can just stay within this range, and we have still got 11 days left on this contract. However, I'm not really too bothered about SMH. It's a covered position. The max loss is defined from the get-go. We've managed risk pretty well, and at the beginning, we had collected $1.38, and now we've collected $3.26. So every time you collect more premium, that directly reduces the amount of risk on a covered position. So we're just going to let SMH work out. UAL has been a handful. We've been working it to the bone. If we have a look at UAL, this is where we are. This is the call, and this is the put up there. The put is inverted. And if we have a look at the order chain here, we can see we started out with a normal strangle, collected $1.10. We then rolled the put side up. So when we open this position, on August 20th. So if we look at August 20th, which is right here on this candle here, August 20th. So we open the position here, and as we can see, as soon as we open the position, or a couple of days after we open the position, price has literally just gone up in a straight line, which is not ideal for us, but we've been making a lot of adjustments and we've been working this position very, very well. So we rolled the put up from 35 to 42, collected 55 cents. Rolled the put up again, 42 to 48, collected 70 cents. Rolled it again even higher from 48 to 50, and collected 50 cents. At this point, it was a straddle. Price kept moving higher against us. So then we had to invert the put and move the put higher than the call. So then we rolled the put from the 50 to the 52.5, collected 89 cents. And then we rolled it from 52.5 to 57, and collected $1.38. And then we rolled the entire thing out in time. Just because of the strike selections, we did have to go to the 57.5 a little bit, but basically we rolled the entire position just directly out in time, because we were getting close to about 20-21 days on the contract. We collected a nice $1.80 in premium, and so far we've collected a total of $6.92 on this position. So if we look at what's happened, if we didn't make any adjustments, our call strike at $50 has been breached and just completely violated, and price still seems to just be going up. So if we didn't make any adjustments, the price currently right now is basically at $60. That's $10 times 100 shares per contract. That's $1,000 loss that we would be looking at right now. However, because we've been managing risk, our spread on the inverted put is $7.50, and we've collected $6.92. So if we work that out, that means we'd be looking at a best case scenario right now. We'd be able to exit this position for a $58 loss. Okay, from $1,000 all the way down to $58, which is huge. That is the power of adjusting. That is the power of managing and working the position. So when it comes to naked positions, yes, you do have that unlimited loss potential, but you can manage the risk. As long as you manage the risk and you don't just disappear for a month and never look at your brokerage account, you'll be fine. You know, if for every 10 losers that you have, every $10,000 losses that you have, if you can reduce even half of them by half, that is going to have a massive effect on your P&L. And this is the game. Anybody can put positions on, but it's about managing the risk when things go wrong, and this is the entire game. And if you want to learn how to play the game properly, click the link in the description, head over to EDS Premium, get yourself signed up. Inside, we have a full course and we teach you everything you need to know. No prior knowledge is required. You can see all of our portfolios, so you can copy any positions you like. It's a private community, so you can speak with myself, other like-minded individuals. There's also a 100% money back guarantee. So if you've studied our full course and followed our trades for 6 months and haven't seen results, then we will work with you for free until you do, or you can request a full refund. So it's completely risk-free on your part. It's £1 a month right now. It's so cheap because we've just started. The price is going to increase, but once you're in, you don't need to worry about that. So you are rewarded for getting in early. And with that being said, I will see you guys on the inside.